Hello. Welcome for another Wednesday Wisdom. And today I wanted to ask you a few questions. Like, did you know that an eligible business in the United States can actually apply $250,000 of its R&D credit to the payroll liability? Now, fast forward to 2023, that credit is $500,000. That's literally $500,000 that you can reduce your payroll tax liability by the R&D tax credit. So, I want to pique your interest. I want to see, are you qualified? Did you ever look into, hey, would my business and everything that I do qualify for R&D tax credit? And it's a great question. With this new update that we have now, $500,000 and all the crazy things that are happening, I want to make sure that you are exploring all the possibilities. Now, just for fun, what are, again, this is a Wikipedia, so don't quote me on this, but just for fun, the top 10 companies that are using R&D tax credit are really interesting because 7 of them are in the United States, which I'm going to tell you which one they are. So Amazon is the first one. They have $42 billion in R&D costs. Then we have Alphabet Inc., which is a US company. We have Huawei, it's a China company. Microsoft, which is on number 4 with almost $20 billion in R&D. We have Apple, we have Samsung, Facebook, Volkswagen Group, Intel, Roche Holding, and then we have Johnson & Johnson. Okay, so you might say, well, wait, I'm not as big, I'm not a big corporation, I'm small. The funny thing is that most of the companies that are using it, the majority of the companies that are using it are just small to medium companies. These are the biggest players, but that should not intimidate you to see, are you qualified? Do you have expenses that would qualify for the R&D tax credit? So I want to give you the 5 states, and really this is important for me to see because it matters where you are in the United States. 65% of all the R&D in the US is comprised in 5 states, which California, with the Silicon Valley, there's no surprise there, occupies number 1 with 28% of the R&D expenditures that are done in California. Then number 2 is New York, which is 19% of the expenses. And then we have Florida and 9%, and Texas at 8%. And we have Ohio. So since we have clients, we don't really deal with Ohio much, but we have clients in California, New York, Florida, and Texas. If you are interested in the R&D, I want to have a conversation with you. So we will have several videos. We'll have a series that will really dive deep into the R&D and see, are you qualified? Before you go and have, a full research on it, the full you might be surprised what qualifies. So, without further ado, let's get into what is R&D. So R&D stands for research and development, right? Tax credit. And what does that mean? And it had multiple names over the years. This is an old credit in 1981, and I won't bore you with that. But what's important is that it gives you dollar for dollar cash savings for performing activities to the development. And this is the crucial part. If you remember anything from this video, is the activities that you spend money on have to be development, design, improvement of multiple things, either products, processes, formulas, software. So this is it. Are you doing anything to develop, design, or improve any of these? And this is really interesting because it could be a software lending company, which is shocking. I think they have 20%. They allocate about 15 to 20% of their revenue. They're developing something. They're developing a process. So what does that mean? That means this is such a huge credit that if you're doing anything, you're incorporating AI, you're doing all types of different improvements to processes, you can actually take this credit and you did not even know it. So what's the purpose? Why would this credit be around? So number 1, I think the purpose was really to incentivize the companies to really spend money in the United States and to create innovation in their businesses. Remember all the costs. Now, this is one key element. You cannot spend the money for R&D sending your, software development to India or to any other country. It has to be U.S. labor. It has to be the expenses have to be done in the United States to really get the credit. So I don't want to get it very complicated. So I just want you to ask yourself, are you doing something that could qualify, right? Develop, design, implement, improve, like anything that you could do on this area. And it doesn't have to be, people think that it has to be something completely innovative, right? You don't have to be Amazon. You don't have to be Apple or Microsoft to really get advantage or take advantage of the credit rather, right? And we want to talk to you in the next few weeks about what kind of expenses qualify, what kind of eligibility do you need to meet. And the meat of this is, I'm making it very simplistic. So today, I want you to know about it. I want you to be interested and curious, is your business qualifying, right? So if you're real estate, we have a lot of real estate investors, and we have a lot of real estate clients, and people that follow, us on the real estate does not qualify for R&D. Now, they have other things in place, but if you do lending, you get into some other areas of real estate you might. If you do property management, for example, and you come up with a new app, or anything that is outside of the acquiring or just the investor portion and development, might not be, but architectural side could be. So again, don't dismiss it just because, I'm real estate, I really don't do R&D, it's not for me, we don't care about it. So you have to understand, dollar per dollar, are you qualified? So the biggest question people would ask me, so well, how much could I get? Like what's the question? So you see everywhere, if you go on the internet, you will find anywhere from like 6%, 7%, 8%, 10%, 15%, 20%, okay? What's the credit? So I'll give you a very simple example or a simple kind of guideline. The answer is it depends, and everybody will hate me when I say that, but every accountant, this is the answer. It depends. It depends if it's your first year claiming the credit, if it's a subsequent year, what kind of method are you using to get the credit, right? So it could be anywhere from 6% to 20%. Now, where do people fall? It all depends. Is it worth it for you to inquire about it? It doesn't hurt. So if you think there might be a chance that you are doing software development, you are doing engineering development, you're doing any type of architectural on your business, especially if you're in manufacturing side, right? You're incorporating solar into what you're doing right now. There's just so much going on the R&D that we don't sometimes realize. I would love to have a conversation with you. Like if you want to say, can I have, like, what if? So if you're interested, leave us a comment, down below, and we'll have a link for you to schedule an R&D free tax assessment to see, do you qualify? Is your business qualified? What kind of entity do you have? So we'll go through all these questions with you on a free 30-minute consultation about R&D. Now, in the next videos, stay tuned because we will really dissect this credit to see, are you qualified and how much can you get? Remember, it's $500,000 limit just for payroll tax that you can do, the cap in 2023. And there's other ways you can use the credit as well. So I would love to see you. And if you are using R&D, what's your experience? What have you seen? Are you maximizing it? How do you track it? I would love to hear feedback of how you're doing it and how does it work for you. Until next time, all the best. Bye-bye.